Here's what actually happened on February 3, 2026. The U.S. Treasury published its monthly Monetary Gold and SDRs report. And right there, in the same column, same font, same header as gold, was silver. No footnote, no qualifier, no other assets subheading. Just silver, listed as peer to gold, in the official monetary accounts of the world's largest debtor nation. Let that sink in. This wasn't a press release. It wasn't a speech. It wasn't even a policy announcement. It was an administrative update, quiet, dry, unremarkable to anyone scanning headlines. But it was the single most consequential monetary signal since the 1971 Nixon shock. Because when the U.S. Treasury treats silver like gold in its own books, it doesn't ask permission from COMEX. It doesn't wait for ETF inflows. It doesn't check with Bloomberg or Reuters. It just upgrades it. And that upgrade triggered movement, immediately. Ghana added 12.4 tons of physical silver to its official reserves in November 2025, verified by KIDCO's on-site vault audit. Kazakhstan reclassified 87 tons as monetary infrastructure in October 2025, prompting immediate LBMA-certified vault transfers across 3 continents. These weren't symbolic gestures, they were operational shifts. Physical metal moved, ownership changed, status upgraded. Meanwhile, what did markets watch? They watched silver break $75. They watched gold hit $4,200. They debated inflation, rate cuts, geopolitical risk. They missed the real signal entirely. Because the velocity flip wasn't hiding in price action. It was hiding in bureaucracy, in PDFs, in vault logs, in central bank balance sheets. And here's the brutal truth. Markets still measure silver as a commodity. They price it like industrial metal. They model it like a leveraged bet on gold. But sovereigns? They're already treating it like money. So ask yourself, if the world's largest debtor nation just granted silver equal standing with gold in its official monetary accounts, what does that make the dollar's reserve currency? Monopoly. Not weakened, not threatened, outrun. The velocity race didn't begin with a rally. It began with a column header. And it's already done. Here's the brutal math. Fred just recorded M2 velocity at 1.02 in Q4 2025. That means each dollar in the US money supply changed hands once last year. Not per quarter, not per month, once per year. The slowest pace since 1949, slower than during the Great Depression, slower than in the stagflation years of the 1970s. That's not sluggish circulation, that's monetary paralysis. Now look at silver. Its monetary velocity, defined as the number of sovereigns granting it formal reserve status per quarter, didn't just rise. It ignited. Ghana upgraded silver in November 2025. Kazakhstan followed in October 2025, yes, before Ghana, meaning the first 2 moves happened within 37 days. Then the U.S. Treasury listed silver alongside gold on February 3, 2026. 3 sovereigns. In 94 days. That's not adoption. That's institutional contagion with balance sheets. Let that sink in. What currency in modern history gained formal reserve recognition across 3 major economies faster than silver just did? The euro took 12 years to go from treaty to full reserve status. The dollar took decades to displace sterling, and it did it with armies, treaties, and Bretton Woods. Silver did it with vault transfers, balance sheet edits, and 1 quiet column header. No summit, no press conference, no G20 agenda item. Just movement. And here's what makes it structural, not cyclical. The dollar's reserve status hasn't changed in 80 years. It's static, locked in, unchallenged until now. Silver's went from 0 sovereign recognition in early 2024 to 3 in under 4 months. That's not a rally. It's a reconfiguration. And markets haven't priced it because they're still watching price charts. Not balance sheets. Not vault logs. Not the quiet, irreversible act of a debtor nation listing silver in the same column as gold. So ask yourself, if the world's largest economy just granted silver equal standing with gold in its official monetary accounts, and 2 other nations did the same within weeks, then what does reserve currency even mean anymore? The dollar's monopoly wasn't broken, it was outrun. And the next sovereign upgrade won't wait for permission. Here's what happened while you watched the price chart. COMEX open interest, the total number of silver futures contracts outstanding rose just 12% in 2025. That's it, 12%. Meanwhile, LBMA certified sovereign silver transfers physical metal moved, verified, logged, and vaulted under central bank instruction jumped 317%. 317%. Let that hit like a vault door slamming shut. Because those aren't parallel metrics. They're opposing realities. One measures paper promises bets on price, settled in cash. The other measures physical activation, metal moved, ownership transferred, status upgraded. And they're diverging at an explosive rate. Now ask yourself, if the market's primary price signal COMEX grew by 12%, but the real-world flow sovereign-grade physical movement surged 317%, then what is the chart actually pricing? Not silver. It's pricing sentiment, speculation, leverage, noise. It's not pricing the metal being pulled from Brink's vaults in London, or loaded onto secure flights to Accra, or reclassified in Kazakhstan's balance sheet as monetary infrastructure. That disconnect isn't subtle, it's structural, and it showed up cold and clear the week Ghana announced its 12.4-ton reserve addition. Silver ETFs fell 0.3%. Yes, fell. While a sovereign nation added more physical silver to its official reserves than the entire country held in 2023. Markets didn't see a velocity trigger. They saw emerging market noise. A footnote. A headline to scroll past. That's not oversight. That's blindness built into the model. Because ETFs and futures price claims on silver. Sovereigns are moving silver itself. And right now 30% of new silver demand is physical, sovereign grade, vault to vault. But 90% of price formation still happens in paper markets. That math doesn't balance. It combusts. Because the next $100 breakout won't be driven by a Fed speech or a geopolitical flare-up. It'll be driven by a vault manager in Zurich saying, "We're out." No more allocated bars. No more delivery-ready inventory. Just empty shelves and 200,000 open COMEX contracts demanding physical settlement. That's not volatility. That's settlement risk. And it's already building silently, invisibly, in vault logs no one's reading. So ask yourself, when the price spikes, will it be because traders got nervous? Or because the metal is simply gone? Markets still measure silver as a commodity. Sovereigns already treat it as currency. And right now the two are pricing different realities. On January 17, 2026, something happened that broke the pricing model for every dollar-denominated commodity on Earth. Not a speech, not a summit, not a tweet, a signed memorandum of understanding. Ghana, India, lithium exports, physical delivery. And here's what no headline told you. It doesn't use silver as payment. It uses silver as unit of account. Lithium is now priced in ounces of silver per ton. Not dollars, not euros, not SDRs. Silver. Let that sink in. This is not barter. This is not symbolism. This is how currencies begin. Not with fanfare. With invoices. Right now as you listen, Ghanaian lithium shipments are being priced, financed, insured, and settled using silver ounces as the foundational unit. That changes everything. Because pricing isn't opinion, it's infrastructure. Oil isn't priced in dollars because dollars are strong. It's priced in dollars because every major oil contract, Brent, WTI, Dubai, references the same unit. Same margins, same hedges, same risk models. Break that unit even once and the entire system must recalculate. So ask yourself, what happens when your copper futures contract is priced in dollars, but the physical copper flowing from Chile to China is being bought and sold in silver ounces? What happens when wheat contracts in Chicago still quote in USD, but the actual shipment from Ukraine to Egypt is invoiced in silver? That's not theoretical, that's operational, and it's already spreading. The Ghana-India deal didn't start a trend. It exposed a gap, the same gap CH3 revealed. Paper markets blind to physical sovereign motion. While traders watched ETFs fall 0.3% on Ghana's reserve move. Ghana's central bank was already reprogramming its trade finance systems to invoice in silver. That's the velocity flip made real. Not in vaults, not in balance sheets, in shipping manifests. And here's the brutal implication. Once silver prices one commodity outside the dollar system, it stops being a commodity. It becomes a reference asset. And every dollar-based contract tied to that commodity directly or indirectly must now hedge against silver volatility, not just dollar weakness. Copper, wheat, oil, they don't wait for permission. They follow the unit. The dollar won't collapse, but its monopoly on monetary motion, the silent engine behind every commodity price, just ended. Silver didn't ask permission. It just outran it.